Hello, thank you all for joining today. I'm Carolyn Styne. I'm the co-owner of the Loop Group in Los Angeles, and I am a proud founding member of the Independent Restaurant Coalition. We are really thrilled to have you today for what we promise to be a very informative meeting with our friends at Baker Tilly. They are a leading tax advisory and assurance firm with vast expertise in restaurant finances. And this is something that is getting more and more complicated as new benefits and regulations come into play on a daily basis. So I know I'm personally looking forward to hearing what they have to say. Today, we're here to talk about what the IRC is, what the restaurant program included in the American Rescue Plan is, who qualifies, how to apply, how to maximize with programs like the Employee Retention Tax Credit. It's all a lot of information, but we're going to try and make it clear and concise and understandable for everybody so that they can take advantage of what is ahead. We have a few housekeeping notes. We have a lot to cover today, so we're going to get started right away. We are usually doing these on Zoom, and I can normally see everybody's faces, but there were so many people who are interested in this, which is great to hear, that we had to move it to a webinar. But we want to keep you as much a part of the conversation as possible. So please use the Q&A tab and enter questions in there, and we will try to get to all of them. If we don't get to all of your questions today, we will make sure that we get them answered, and we'll follow up with an email. So I'm going to go ahead and introduce everybody we have here today with us. We have Todd Bernhardt he's a partner and leader of the restaurant practice at Baker Tilly. We have Ashby Walters, a senior tax manager at Baker Tilly. And we have Stuart Chapman, a partner at Thorn Run Government Relations. He's an advisor to the IRC and one of the people who has literally held our collective hands throughout this whole process and has been an invaluable member of our team. So first I'll let Todd tell us a little bit about what Baker Tilly is and give us a bit of his information.
Yeah, thanks, Caroline. I'm happy to be here, and looks like we have a great audience out there. It's even continuing to grow a little. So Baker Tilly, we're a top 10 accounting advisory firm with almost 5,000 professionals throughout the country. We have a coast-to-coast restaurant practice, major markets in the Midwest, Texas, California, with a recent merger of a very large practice. So we work with independent restaurants. We do work with franchisees, franchisors. So we have a large practice throughout the country. We do audit, tax, basic accounting issues, but I would say the last year, our advisory practice has really stepped up in helping these small businesses, take advantage of PPP, employee retention credits, which we'll talk about, just all the various nuances that have happened out there. So we're ready to help. And one thing, we're a large firm, but we're broken up into practices. So I actually lead a restaurant practice, but I'm also our small business leader. So, we work with large and small companies. So depending on your size out there, we have a team that can help. And we'll get some insights later on the employee retention credit and also this grant. So happy to be here.
Okay, thank you, Todd. Just to give you a little background on the IRC, this grassroots independent restaurant coalition. We were founded in March to give independent restaurants and bar communities in our community a voice in Washington. As you all know, we were facing a moment of do or die as the pandemic closed in on us. And we knew we had to do something to help ourselves survive what was undoubtedly going to be an extinction event. There was one of those moments that we just said, nobody's going to help us if we don't help ourselves. So what started with a call with 20 people in mid-March has grown to a movement of over 100,000 people. And last April, the Independent Restaurant Coalition and Bar Community told Congress that we needed a grant program in addition to PPP to survive this pandemic. We all agreed that PPP was helpful, but it was just a Band-Aid, and we had a long road ahead, and PPP wasn't going to cover it. And I have to say, one of the biggest lessons I've learned over the last year is that we have the power to make change. Over the past 11 months, my colleagues and I have made countless phone calls. We've reached out to every person in government that we could possibly know, every connection we possibly ever made in our restaurants to reach those people that could help us actually make something happen. And those calls literally led to making direct connections with Representative Earl Blumenauer from Oregon and Senator Roger Wicker from Mississippi. And that resulted in their introduction of a bipartisan, bicameral piece of legislation called the Restaurants Act back in June. And consistent persistence and hounding led us to be on the forefront of conversation with Nancy Pelosi. And she ended up including the restaurant support in the HEROES Act when she introduced it back in November. And then that led to solidifying Chuck Schumer's support of restaurants and his insistence that restaurants be prioritized in this 2021 legislation. And this month, Congress passed this first ever grant relief for restaurants and bars based on the Restaurants Act. And now our dream and the thing that we thought was never going to happen has now become a reality. And this is, I think, one of the things that will allow our industry to survive in the coming year and beyond. And it's going to allow restaurants and bars to breathe a sigh of relief and know that we all don't have to change careers now. This grant fund will help us pay for payroll, pay down debt, pay for PPE and all of those expenses that we have paid for building out outdoor dining spaces and all of our supplies, and so much that this grant program does for us, that it's really a lifeline. And it is probably our biggest shot at bringing back those 2 million people that are out of work still. And something that really was something that was driven home to me throughout this whole process is that the restaurant industry is the largest employer of minorities, young women, and people in marginalized communities. So this piece of legislation, this relief that is coming our way, will not only help us and help those other industries that we support, but really help those individuals who are in serious need. I'm going to let Stuart take over from here and give us the nitty gritty on what's included in this program. And again, put your questions in the Q&A and we will get to them as we go.
Thank you, Caroline. Good to be with all of you. Stuart Chapman. I'm a partner at Thornton Partners in Washington, D.C. We have been an advisor to the Independent Restaurant Coalition over the last year and have been thrilled to work with them. I'm also excited to be here with Baker Tilly today to learn a lot, I'm sure. We've worked with Caroline and many of her colleagues over the last year, and with Erica Palmer, who's the Chief Operating Officer for the Independent Restaurant Coalition, and she's here with us today. So all of the work that Caroline was talking about led to a bill called the Restaurants Act. The Restaurants Act, as part of the recent American Rescue Plan, was converted into the Restaurant Revitalization Fund, and that is a $28.6 billion initiative that went through. This is a grant program that will go to eligible entities, and we'll talk about some of those today. But as opposed to PPP, which many of you have experienced firsthand, this is a direct grant support. This was something that we asked for. We understood the shortcomings of PPP, and we wanted to make sure that there was a grant program in place. This can be used, and Baker Tilly will be able to share probably more about this, with the 2 rounds of PPP that have already occurred, with the EIDL and with the ERTC, the Employee Retention Tax Credit. The program administrator for this Restaurant Revitalization Program Fund is the Small Business Administration, whereas many of you during PPP, whereas you would have gone to your local bank or lender to get a PPP loan, in this case, you're going to be going dealing straight with the Small Business Administration in DC. There are a number of questions that we can't answer, sort of how it's going to be implemented, but we have been having these conversations with SBA and sharing our perspective and making sure that as they're standing this program up, it's one thing for Congress to pass a program, it's another issue for it to be stood up, that our input is being registered and is being heard and is being part of this implementation. How does the grant fund work? Again, not a loan program. It's a direct grant program that you can use for a wide variety of expenses. We have been told by the SBA that they are working to get applications available in late April. We understand they're still working on standing up a technology platform, but we're still hoping that it will be late April, possibly a little later, but we are encouraged by the progress that we're hearing from them. If you're not able to use all of the grant that you receive from the SBA, you simply return the money back to the federal government. Who is eligible to receive funding? All food service or drinking establishments as defined in the statute as restaurants, caterers, brew pubs, food stands, food trucks, saloons, bars, lounges, tap rooms, and tasting rooms are eligible. Who is not eligible? You're not eligible if you're part of an affiliated group with more than 20 locations, regardless of whether those locations do business under the same or multiple names. You also are not eligible, you cannot be publicly traded. Nor can you have a pending application under the Save Our Stages program, How do you calculate your maximum grant amount? If you're a restaurant or one of the establishments and you opened prior to 2019, it's fairly simple. You take your 2019, subtract the 2020 revenue, and also subtract out the PPP loans that you've received. If you opened at some point in 2019, you take an average of your 2019 monthly revenues minus your 2020 revenues and the PPP that you've received. For example, if you open up July 1st of 2019, you would take your revenue from the last 6 months of the year, divide it by 6 to get an average monthly revenue number, and multiply that number by 12 to get your 2019 revenue. For those restaurants that opened in 2020, you're eligible to receive funding equal to the eligible expenses incurred. For example, if you opened up in the midst of the pandemic in July of 2020, you would add up all of the expenses you incurred from the eligible expense list, minus, of course, your revenue, and that would be your total grant. What is the maximum grant that you can receive? For an individual restaurant, it's $5 million. And for a restaurant group, it's $10 million. How can you use the funds? Eligible expenses include payroll and benefits. And like PPP, the employee compensation would be capped at that $100,000 a year number. You can use eligible expenses include mortgage, but you can't prepay, rent, no prepayment, utilities, maintenance, including construction to accommodate outdoor seating, and supplies, including PPE and cleaning materials. Of course, you can count food and beverage expenses as eligible expenses. Like PPP, these grants will have a cover period, which is a period of time where you can use the grant and count eligible expenses that are covered by the grant. But unlike PPP, this is a longer period of time, which is exactly part of the primary thrust of having the Restaurants Act. The grants can be spent on eligible expenses from February 15th, 2020 through December 31st, 2021. Under the legislation, the SBA administrator may also extend the period through 2 years from the date of enactment if conditions warrant. And last, and I'm sure Baker Tilly may have more to add on this, what can I do as an owner to prepare to apply for the grant when it becomes available by SBA? Preparing, you need to, although we are pushing as a group to ensure, to push to indicate that we want to make this as accessible as possible for all owners. There is at this moment a need to have a DUNS number and potentially to register under SAM, but we are pushing to suggest that SAM is not something that we would like, and we don't think adds to accessibility issues. We also would suggest that you pull your 2019 tax returns so that you know the 2019 revenue numbers. Still a little unclear, and we're working with SBA on what will be required for 2020 revenue. It could be a certified 2020 P&L, could be tax returns if you've already submitted them or will have submitted them. Could be something else. So we're recommending, I think you have to assume that there'll be an audit. We're also recommending that you go back and inventory what expenses you used for the first 2 rounds of PPP. So you have some sort of accounting about how you used it, and then you can keep close track of how you would use the grant. Because, again, I think as we'll hear later, you can't use the same federal dollar for the same federal expense.
Stuart, I'm just going to jump in. Sorry, there's a ghost voice here. I want to make super clear that we are actively working with the Small Business Administration to remove the cumbersome process of applying for a SAM and DUNS number. We can't tell you that it won't be needed at this time, but we hope to have an update by the end of the week. So if you are willing to wait a few more days, if you haven't started the application process, we'll provide an update on our website at the end of this week if you do need to continue applying for a SAM and DUNS number. If you've already done so, it wasn't for naught. It gives the SBA a way to easily verify who you are and support their fraud, waste, and prevention efforts. So your time and effort was worthwhile. And again, we'll provide an update on our website at saferestaurants.com.
Now I'm going to let Todd and Ashby take over and maybe even go into the detail for anybody who doesn't know what a DUNS number is and Sam, but all the other details. I know the employee retention tax credit thing is just something that makes my brain explode. So there you go.
Yep. So thanks, Caroline. I think, one thing we've been trying to tell our clients, and it's difficult during these times, is a little bit of patience would be helpful, because this grant's not going to be available tomorrow, right? We all know that. And so I think the message of, hopefully the coalition can get this DUNS and SAMs requirement out of there, and then you don't have to go digging for that. But that is going to be a lot of work if that's the case, but it might be something you have to do. So, but it's, similar. I've spent more time on the PPP loans than anyone would care to do in their whole life. And I would say in that program, especially round 2, being first to the bank this round didn't help you, right? So there is a little patience. So we have time. And, if the sheltered venue grant is telling you anything, that passed in December and you still can't apply, right? So there's time. Now, this is supposed to go faster and it's supposed to be easier, but we don't know the rules. So, but there is some things I think you can do to prepare. One thing I'm telling clients is, if you haven't gotten PPP, keep trying to go for it, because we don't know that you can get this grant. It might run out. And I know a lot of the FAQs are on, will this money run out? And we don't know. I mean, obviously the Restaurant Act asked for a lot more money than this. So we don't know, it's what's there. So hopefully there's enough, but so I would go get PPP. I know it's a little bit more work to get forgiveness for some people, but I still think it's the route I would go, even if you get it in your queue. And just off topic, that expires in a week, but it's within Senate to get passed to the end of May. So we expect it'll get passed and you can apply for PPP for a while. We're seeing a lot of sole proprietors applying right now. So if you haven't applied for PPP, I would still pursue that. If you didn't think you were eligible for it, you probably are. We can help with that as well. For the larger restaurants out there, I would start looking at your affiliation rules. Are you really eligible? We mentioned before, just because you have different brands doesn't mean they're not affiliated. So I really look at those rules. That's key for employee retention credits and this grant. So I would start working with your CPA or your attorney, try to figure out, are you eligible for these programs? Because you might, affiliations with others might already take you out of it. And so I do think, you know, we're trying to figure out what the 2020 requirements will be, you know, so make sure you would get your financials in good shape for 2020. You know, you might not be able to get your tax return done, but that's going to help you probably. But at least having good solid financials, and it might be a way they want you to certify those. So if you don't have your 2020 financials in good shape, I would start working on that. You know, Stuart mentioned that, you know, this program may get audited, and the sheltered venue grant already has an audit requirement in it. So that could be something that comes. If you get over $750,000 of federal grants in a year, typically you're required for a single audit. So that's something, make sure your records are in shape. You know, if your sales, make sure they're tying back to your point of sale. You know what? So start getting your house in order. You know, and I think there's other areas of that nuances, since this is based on gross receipts. You know, there's different nuances for a restaurant. How you recording your gift cards? You know, are you just dumping those in revenue even though they haven't got redeemed? You could be overstating your 2020 revenue if you're selling a lot of gift cards. So I would take time to look at things you might not have looked at. We're getting a lot of questions on third-party delivery. You know, is that revenue? There's probably some gray in that of how you record the proceeds you get from third-party delivery. So I would take a look at that. And, you know, it's, don't just, you know, kind of do things you did in the past. I would take a look at your, especially your 2020 gross receipts, and see how you're recording things. You have the time now to spend on that. So that'd be my advice on that. I'm sure we'll get some questions about the grant, but I'll let Ashby, who's a manager on our team, talk about the employee retention credits, because that's really timely. I'm sure you're seeing news, and it changes all the time. So some new positive information came out last week.
Thank you, Todd. Yeah, so the credit, it was up until a couple of weeks ago, it was up to $28,000 per employee for companies, but now it is up to, or I'm sorry, not $19,000, but now it's up to $33,000. So that's $5,000 for 2020 and then $28,000 for 2021. There's been a few other updates that have occurred in the recent 3 weeks, 4 weeks or so. So for example, one of the great items is that it is now open to new businesses. So that's businesses where operations began in 2020. It's for operations that began after February 15th, 2020. It's also been extended. That's how we got to $28,000 for the 2021. It was expiring at the end of June of this year, but now it expires at the end of this year. And it's $7,000 per quarter in 2021 per employee. It's also now 100% for businesses that experience a drop of 90% in gross receipts since in comparison to the same quarter in 2019. One of the bad items, though, that occurred in the recent changes is that the IRS audit period has now been extended to 5 years. So they haven't made any changes in terms of your ability to claim it. That's still 3 years from the original filing deadline. Now it's still 3 years for that, but now it's 5 years for audit. And then there's been also more clarity in terms of some of the rules, in particular, the suspension test. So there's been a lot of questions that have surrounded the suspension test. So just as a quick summary or refresher as to what the rules are, you can receive a credit for up to $5,000 for 2020, up to $28,000 or $7,000 per quarter per employee in 2021. And the way to become eligible for that is there's one of two tests that you must pass. And it's an either or. It's not required that you meet both. And so it's either based on a drop of gross receipts, or it's based on full or partial suspension of operations. And the rules for suspension of operations are pretty broad. They can be based on a department. They can be based on a location. It can be based on operations that were impacted due to social distancing rules, or up to outright requirement that the operations of the business fully closed for a period of time. But the suspension must be based on a government order related to COVID-19. In the rules, there's a lot of other rules that go into this, so I'm sure we'll cover these during the Q&A. If you have any questions, just ask through the Q&A, and we can also help answer those questions offline as well.
Yeah, so I know there's a bunch of questions out of the taxability of all this. So the grant, the restaurant grant is similar to PPP where it's not taxable, you can deduct the expenses. So, however, the employee retention credit, it's taxable, but the credit isn't taxable, but you don't get to deduct the related payroll. So if you take a credit on a tax, this is similar to a work opportunity tax credit. If you take that credit on you don't get a deduction for the related payroll. The credit's still better, but it is taxable. So it's still very positive development. And you know, the fact that these partial closures make a lot of restaurants eligible. You know, some of the FAQs that the IRS released, you know, they give examples of restaurants that have their drive-through open are still doing okay, or maybe even better, but because their indoor dining is closed, they're eligible. So the partial, it's very fact circumstance, but the partial closures really add to who's eligible.
Yeah, that's a good point. Another thing too that I forgot to mention was that double dipping is not allowed. So you also want to be strategic as to how you use this. And what that means is by double dipping, you can't use the same wages for grants such as the PPPL, and you can't use that for other credits. So you want to be strategic as to how you use it. There are some things that you'll want to put the wages towards before you put the wages towards the ERC. So for example, PPPL, that's 100% dollar for dollar coverage by the government, whereas the grant is only up to 70%. And then as Todd had mentioned, you still have to pay tax on it. So if you have to choose between the PPPL and the ERC or some of these other grants, you want to make a strategic business decision over that, because again, the ERC is only up to 70% of what you pay in wages versus PPPL would be 100% of what you pay in wages, meaning dollar for dollar wise.
Okay, we have a lot of questions in the chat. I just a couple to start with for you all is, so in calculating the ERTC, do wages include tipped wages?
They do. Okay. And they also include healthcare plan expenses paid by the employer.
But that does not include payroll taxes and those other expenses, correct?
Not the employer side, correct. And unlike other tax credits, you actually get to still take the tips credit. So you get to include this in the tips in this credit, but then you also get to take the tips credit on top of that. So it's a double bonus.
Yeah, I think the payroll tax credit has confused a lot of people. You're allowed to include the employee FICA and federal tax that you withhold. It's just the payroll taxes the employer pays, their side of the FICA and Medicare. So we've seen a lot of people, this goes back to the PPP, it was really a technical glitch that was written where they were implying that you had to take what net of what you pay the employee, but it's really your gross payroll. So if you pay an employee $40,000 salary for a year and you withhold $10,000, you still $40,000 is eligible for PPP employee retention credit. It's just that your FICA taxes, that the employer side of it is not eligible. I know that's been a lot of people, you know, had issues with that during PPP.
Okay, here's, can you clarify once again how programs like PPP, EIDL, and ERTC work with the restaurants grant?
I can take that one if you'd like, Todd. When you apply for your Restaurants Act grant, you are going to subtract the amount that you received in PPP, and that's it. You do not need to subtract the amount that you receive in an EIDL or an employee retention credit.
Yeah, the play there will be, you have to not double dip. So the expenses you use to qualify for employee retention credit or PPP, you have to use different expenses to qualify for the grant. But the grant has a longer period and more expenses part of it. So,
like you can use your PPP loan right now can cover your first 24 weeks of the year essentially, and then this grant will cover the final 6 months, 24 weeks of your payroll, right?
yeah, exactly. So there's a lot of interplay with all of this. So, the accounting, gets to be a lot of, there's a lot of accounting goes with it, but it's kind of part of the deal with all the money that's being given out.
Right. A big one that's coming in is how soon can I apply for this? And how do I apply? Do we have that answer yet?
Sure. Stuart, do you want to jump in?
Yeah, I'm happy to. You can add on this. So we're still waiting. When legislation passes, we have to have guidance from the appropriate agency. I think as Todd mentioned that there as the Save Our Stages piece that went through at the end of last year still isn't up and running, but their shortcomings are our gain. And so they're both located at SBA, and we're hoping that that will accelerate the effort to get the restaurant grant up and running. We're still hoping that we're a few weeks away, but only a few weeks away. So we'll need to wait for, we'll be watching in the IRC and through saverestaurants.com, we'll be providing information on sort of when that timing occurs.
There's another group of questions. People are wondering, what happens if I have more money left over in the end than I can use? Again, we have a really long, covered period from February 2020 through the end of this year. But I think there's concern that if it's a difference in revenues and we have money left over, what happens?
It will go back. Yeah, I think they're still working that out, and that was part of our conversations with SBA about sort of how to claw that back. But I think you made a good point, Caroline, is that there is sort of maximum flexibility. This is one of the fundamental differences between PPP and the restaurants grant, the grants, is that it could be extended. But either way, I think there's more flexibility, and if that sort of implementation, I think we'll see and the sort of characterization of what that clawback would look like, I think will be coming out in short order.
I think there's also a little bit of concern about because of what am I trying to say? The revenue aspect of it. If you didn't have a drop in revenues, you're not going to be eligible for this. This is about having incurred a substantial loss to your ability to operate, correct?
You are correct. I know there are a number of folks in the chat, and I'm just going to sort of weasel my way into this conversation right now. We have 193 questions in the chat, which is amazing. And also there's no way we're going to get through all of them. So we will do our best, and I'm going to try to fly through some of them, and then also let you know that if you visit saverestaurants.com/resources, we have an FAQ on that page, and we will continue to update the documentation on that page. If it means you no longer have to deal with Sam and Duns, if it means that we have guidance from the SBA, if it means that we have consistent questions in the chat that we can answer, we will update them there. So please do make note of that. I'm going to start with an employee retention credit question for you, Todd, and then I'm going to try and whip through a bunch of restaurant grant questions. I filed Form 941X for fourth quarter for employee retention credit 3 weeks ago. How long is the process before hearing back?
I'll let Ashby respond, but the IRS is backed up in every avenue these days. So my gut says it's going to be a while, but Ashby, I don't know if you've heard anything different.
Yeah, 3 to 5 months now. Is that what I've been hearing for that? So the best approach to go is to reduce your payroll taxes, your payroll tax deposits for fastest relief. Second fastest relief is filing the 7,200. And then filing the 941s and 941Xs, again, as Todd was mentioning, as others are experiencing, it's going to be, right now it's a pretty long delay. The reason being is because it's still predominantly paper filing. So it's, based on when they received the information. Whereas the 7200, that is, you file that through faxing, by fax. And so they get to it much more quickly.
Stuart or Caroline, can you address, will payroll taxes be an eligible expense for restaurant grants? And also, will insurance premiums such as property, workers' comp, general liability, or liquor liability be considered an eligible expense?
I can jump in. Payroll taxes, I think we even discussed this already, are not an eligible expense, nor are insurance, but health insurance is an eligible expense.
Terrific. I have a small hotel with a full service restaurant and bar. What category do I need to be in to qualify? If you are providing food service in your operations, you will qualify. We're not quite sure what that's going to look like. We're waiting for guidance from the Small Business Administration on how you might proceed. I'm going to go through this really broadly. There are a lot of questions about how do I calculate the amount of my grant? So I know Stuart mentioned this, but we're just going to go through it one more time. If you opened before 2019, so you were fully in business for the full year of 2019, you will take your 2019 gross revenue minus your 2020 gross revenue and subtract the total amount of your PPP loan. So your first loan and your second loan if you received both. So once again, 2019 revenue minus 2020 revenue minus PPP loans, and that's your grant amount. Now, if you weren't open for the entirety of 2019, you're going to take the average of your 2019 monthly gross total, and then, you're going to take the average of your 2019 monthly gross revenues and multiply that by 12. Then you'll treat that as your 2019 revenue, and you'll subtract your 2020 revenue, and you'll subtract any PPP loans that you received. For restaurants that opened in 2020, there is some confusion because of a technical error that was made in the processing of this legislation. So if you have an accountant that is reading all of the bill text, they may say, oh, you're not eligible for other expenses, you're only eligible for payroll. We did speak with the SBA this morning. They are making that correction. And so if you opened in 2020, you are eligible to receive funding equal to your eligible expenses incurred in 2020. So if you were throwing open your doors on the first week of March and you were closed the second week of March because of COVID. So March 2020, you opened March 1st, you had to close your doors on March 13th, and you maybe reopened along the way. The actual expenses you've incurred this year in rent, payroll, and supplies will be the amount of your grant. Again, if you receive PPP, you're going to subtract that as well. I hope that clears that up. There were a lot of questions about that. In terms of DUNS and SAM, again, we really hope that we can remove this cumbersome process for you, but if you are in the thick of it, you want to make sure that your DUNS number is matching the entity with which you are paying taxes. So your EAN number and your tax return and the address down to the capitalization and the punctuation need to match your DUNS number. So if you went into the system and you found that, lo and behold, you had 5 DUNS numbers, you will want to either identify the DUNS numbers that is actually the right address and the right information. I recommend taking a screenshot of it, even if it's just grabbing your phone, take a picture of it, and then that is the information you're going to use in your SAM registration. Now, if all of the information is DUNS is wrong, they do have a contact form on their website and an 800 number, and you can contact them. Some people are getting right through and having a change made within 30 minutes. Other folks are having to spend some time on hold, but that is how you change your DUNS number. And you want to make sure that it does match your tax return, because what's happening with the DUNS and SAM system, if it is used for this program, SAM is the only database in the government that has access to about 8 other databases. So it is a way for the SBA to make sure you are who you say you are and to prevent fraud and waste. So I know it is super cumbersome. Like I said, like we've said repeatedly, we're trying to get rid of it, but if you're in the thick of it, that's what you need to do.
I would just interject and say that I personally had to contact DUNS. I think maybe the best way is through their a link on their website. It says, open a case about your DUNS number. And they seem to reply very quickly. You won't be sitting on hold. You'll get a reply and a resolution probably within an hour or two, as long as you provide the documentation that they're asking for. And again, yeah, when you're doing the SAMs thing, make sure that your capitalization, the abbreviations, everything matches exactly what's on your DUNS information, because that can be a hiccup.
Yeah, I would say that's really important, the matching. We've seen this a lot with PPP too, where SBA is trying to do all these fraud preventions and they're going back to DUNS, but nobody knew they were going back to DUNS to look for stuff. And so that's caused a lot of delays. If anyone's out there had trouble getting your PPP, that eventually I think most got through, but that was one of the big problems. SBA was looking at DUNS and it wasn't a good source of information for many people.
Ashby, is a governmental shutdown order alone sufficient to qualify for the employee retention credit?
So on the suspension side, it is required in order to qualify. If you voluntarily shut down, or if you voluntarily reduce capacity, it won't qualify.
So it doesn't have to be a complete shutdown. It can be capacity restrictions.
Correct. Yes, it can be masking, if masking rules have an impact, if it's social distancing rules, hours, changes in hours. It could also be just a location. One of the locations is impacted. It could be that if your vendor, one of your vendors is unable to, for example, access ports, or if the distribution centers that they're using have restrictions that have reduced the capacity to ship out goods timely, then all of those different things can impact it as well. It's a good question.
Thank you. Stuart, may I put you on the spot to address the prioritization of restaurant grant distribution, and also what minority ownership, how minority ownership is defined?
So I just wanted to go back to one thing that Todd said a second ago. My internet connection is a little unstable, Erica, so FYI. I think it's very mindful to remember that we're dealing with a new administration now coming in. And I think, sort of being prepared to go into this process is the best route to go. They're going to be under a lot of pressure. We saw a lot of the bad stories that appeared, obviously, during the first wave of PPP. So I think it's just important to remember that context about where they're coming from. And to sort of be prepared for that. On the distribution, as part of the legislation, $5 billion. And so there was ultimately, there was an additional plus up that happened at the last minute on this legislation. Originally, as it was going through Congress, was $25 billion. We're talking about the Restaurant Revitalization Fund. $5 billion of that is reserved for restaurants with less than 500,000 in gross receipts. That's in the legislation right now. This speaks to a lot of the tenets of the IRC, is to make sure that folks who may be challenged to get that amount, that it's not always going to be the big folks who are able to get that amount. So that pot, as written in the legislation, we're continuing to push SBA to do more around this, but would be available for the first 60 days of the program. It is up to the administrator to create other tiers, so we're in conversations around that. And then the first 21 days, and this goes back to the Restaurants Act as well, the first 21 days of the funds will only be made available to restaurants, women, or restaurants that are women or veteran owned, or socially and economically disadvantaged businesses.
So just to add to that, this does not mean that you should wait 21 days to file your application. The moment the applications are available, you should complete an application and get your information into the queue. We don't know when that will be, just to reinforce that the timeline. We expect that we'll start to see guidance from the Small Business Administration in the next few weeks, but we don't expect that we will see applications until the end of April at the very earliest. We also have received a lot of questions about, we're a husband and wife team. I'm a veteran. My wife is a woman. Are we qualified? Neither one of us owns more than 50% of the organization. We're waiting for guidance on that at this point. But we would assume that because both disadvantaged groups make up 100% of the ownership, that would be, you would be included in the 21-day priority period. But we just don't know what the exact process is going to be. So I can't tell you what documentation you'll need to demonstrate status. There are also lots of questions around what defines economically disadvantaged. We also don't have clear guidance from that at this point. If we look at other SBA programs, we see things like $750,000 in net income, but those don't get attached to any of those numbers, as they will most likely change and be clarified in the next few weeks. Let's see, I know that we had more tax questions, which are things I absolutely can't answer. So I want to make sure that we get those bubbled up to the top. Oh, here's one for you, Stuart. We should address what constitutes an affiliated group.
I'm gonna defer. Todd, you may actually be a better sort of authority on this.
Yeah, I think, well, I would say they may define it better, but it's controlled groups essentially. So if one person either has equity control or can control profits and distributions, so it's probably a 50% rule, right? 51%, do they control multiple entities? Now, ERC gets a little trickier. Ashby, if you want to take that, I think there's a couple different rules with ERC.
Yeah, so for the ERC, there's the parent-child relationship. So if there's ownership that's shared, parent-child of the company, 50% or more, that generally would essentially create affiliation for aggregation purposes. For brother-sister groups, it's if there are 5 or fewer members of one company that own 80% or more of that company, that then also own 50% or more of another company, then those companies would be aggregated. Then there's also relationships that relate to shared services. So essentially, if there is a highly paid executive within the company that also owns another company, that 10% or more of another company that's providing services to that company, then that also creates affiliation. And essentially, if there are any companies that can be joined with other companies in terms of being a single employer, then those companies too would be affiliated. So there's a lot of nuances to those rules. I would suggest that you work with your tax advisor if there's any questions about that. But those are some of the highlights and summary of those rules.
One thing to emphasize, the affiliation rules for every program so far are different. So there's not a one-size-fits-all affiliation rules in the IRS. So that's just, they like to add complications. So just be aware, you could be eligible for the grant, but not ERC as an affiliate group or vice versa. So there's just a lot of different nuances with all this.
If I can ask a question, Todd, we were asked several times and never got a completely straight answer around some of the PPP funding, that if you owned a minority ownership, say 38% of a particular sort of restaurant, whether that counted against your cap or not.
Oh, your cap for the grant that we're talking about? You know, it's a good question. If you're, you know, yeah, I don't know if that's clear. I mean, it wouldn't be. Yeah, I don't know how that would work, because you don't control that entity, you know, for that restaurant grant. So you might just exclude it, because that would be for if that restaurant group applies. So, you know, I would probably go with the 50% control, but I suspect there'll be rules. One thing I think people need to keep in mind is the rules will keep changing. I mean, technically the rules aren't even out, right? There's Congress passed a bill. If we learned anything with PPP, Congress writes law, and then Treasury and SBA start writing the rules. So there will be clarification. I mean, the FAQs for the Save Our Screens, you know, came out months after. So hopefully we're going to be faster based on some of the work the coalition's doing. But that's just something to keep in mind. A lot of the questions people have are really good questions because no one knows the answer, the exact answer.
So I'm seeing so many questions. You guys are amazing. But a lot of them are duplicating questions that were answered at the top of the call. So I'm going to try to give a very quick overview of the grant program. I'm just going to scroll through a few more to make sure I'm not missing any other employee retention credit questions. Okay, so I see a lot of questions about SAM.gov. So I'm just going to address this one more time quickly. SAM.gov is a government database that proves who you are from a business entity perspective. In order to establish a SAM.gov account, you have to have a Dun & Bradstreet number. It is a complicated, cumbersome process that we are hoping to eliminate. If you are just hearing about SAM.gov for the first time today, I would say sit tight, don't investigate it, wait till the end of the week. Please check back to saverestaurants.com/resources, where you will see an updated fact sheet at the end of this week telling you whether you do need to pursue a SAM number or not. If you don't need one, we're just going to take it off the website and you can pretend you've never heard about SAM.gov. The restaurant grant program was designed to replace revenue lost so that you could cover your rent and payroll and basic expenses of operating a business. I know some of you have made dramatic pivots and have managed to actually make revenue this year, and it feels very unfair that we're not replacing profit. The restaurants grant program that you see now is based on the Restaurants Act program that we developed last June. And it was intended to give you a lifeline and save your businesses and provide economic stimulation to our communities. It was a restaurant stimulus, if you will. It was never intended to replace your profit. And I know that that feels horrible if you have taken every penny you've earned and pushed it back into your business and you are struggling personally, or you've taken on other loans. And I would like to say I have a better answer for you, and I don't, but I wanted to acknowledge that we hear you and we see you, and this was very much designed to be a revenue replacement program. Beyond that, I also hear and see your concern about the $28.6 billion going away in the blink of an eye. I share that fear. The way we combat that fear is to continue doing what we've been doing for the past year to get this fund built. And that is share your stories, your pain, and your challenges with your elected representatives. Carolyn can talk about this better than I can, perhaps, as somebody who jumped in from being a restaurant owner to being an amateur lobbyist who's become a professional lobbyist in the past year. Your voices have power. Your stories need to be told. When you pick up the phone and call the people that you elected to office and you tell them that your business in their district is suffering, they will listen. And when you ask them very clearly, and I'll add politely, to continue to support you by adding more money to this grant funding, that will go a long way. One of the easiest ways they can do that is by demonstrating their support of your restaurant by signing on as a co-sponsor of the Restaurants Act. If you haven't been following us since the beginning, you may not know that the Restaurants Act actually asked for $120 billion. And we were delighted to see that the principles of the Restaurants Act were included in the budget reconciliation process that gave us this grant program, but we know it's not enough. So if you have that fear, as I do, and can take a moment to call your representatives and ask them to co-sponsor the Restaurants Act, and if they say, I already have, tell them how absolutely imperative it is that this fund be replenished, because without it, you and your colleagues in the industry may not survive. Carolyn, do you have anything you want to add to that?
No, I absolutely correct that, and I kind of glossed over this earlier because I was just trying to say a bunch of stuff all at once and move on to the meat of subject, but we did work very tirelessly, calling, hounding, having Zooms, doing whatever we could to get in front of these people. And I think that the more you get the word out, not only to your representative, but to other people in your area to also speak up to their representative, the more traction we can get. I would say that we're fortunate that Chuck Schumer has spoken up often about the fact that we will have to plus up the money in this fund. So on the one hand, it's great if the money gets used up because that will show the need and that they will hopefully plus it up. But again, pushing for your representative, your senator, your congressperson, whomever you can get in touch with that person, right? Go to those websites and fill out those, letter forms and actually call their offices to say, we need more money because the restaurant industry is enormous. I had no idea the depth and breadth and the extent to which we keep the economy of this country going. And so they need us and we need to let them know that they need us.
So we just have a couple of minutes left. Don't worry, we will keep track of all of these questions. We will make sure to update our FAQ, and also we'll remind you one more time, saverestaurants.com. You can find the information from the homepage. You can also go directly to the saverestaurants.com/resources, and you will find an FAQ that will give you things like how to calculate your grant amount and what your eligible expenses are. And I want to take a moment to thank Ashby and Todd and the entire team at Baker Tilly. You have been such terrific partners for us. We appreciate your support of the industry and your willingness to answer all of our slightly crazy questions and share your knowledge with us about this confusion around the employee retention credit. It is incredibly valuable, and we appreciate it very much.
Yeah, thanks, Erica. Just FYI on ERC, if you Google Baker Tilly employee retention credit, you'll get a page. We have a lot of resources out there. We have a full webinar link just talking about employee retention credits. There's flow charts. So there's a lot of information out there. I know there's still questions on the program itself, and it's a lot more detailed that can be covered in, a webinar covered multiple things. So just there's a lot of resources out there to look at, and we're helping people. A lot of people try to figure this out, but it's a moving target a little bit.
If you, as a registrant today, you will receive some of this information directly to your email. I want to thank you all for joining us today. We really appreciate you joining us and your questions. Simply by sharing your questions today, you are making a difference in the success of this program. So thank you for joining us and have a great day.